Have you ever wondered what really drives the value of a country's currency? For Iraq, the answer is black gold. The Iraqi dinar is so closely tied to oil that you can't talk about one without the other. Today, we're diving deep into this fascinating connection to see how Iraq's massive oil revenues could shape the future of its currency. Let's get into it. So, how tight is this bond? Well, imagine your entire household income came from one single job. That's Iraq's economy with oil. Oil exports make up over 90% of the government's entire budget. All that oil is sold for is dollars. To pay for everything at home: salaries, infrastructure, public services. The government has to swap those dollars back into Iraqi dinars. It's a simple sounding process with huge consequences. When oil prices are high, or when Iraq pumps more oil, a flood of US dollars comes into the country. This strengthens the central bank's foreign currency reserves, making it easier to keep the dinar stable. Think of it like a dam holding strong against a river. The more water, or in this case, dollars in the reservoir, the more control you have over the flow. A steady supply of dollars means the government doesn't need to print more money, which helps keep inflation in check and builds confidence in the economy. But what happens when the tide turns? If oil prices plummet or production gets hit by, say, geopolitical issues, the river of dollars slows the trickle. Suddenly, there's a dollar shortage. The government still has bills to pay and needs dollars for essential imports. This puts immense pressure on the dinar. In the past, this has led to a weaker dinar, making imported goods more expensive for everyday Iraqis and shaking public confidence. It's a classic case of supply and demand, but on a national scale. Now, you might think, high oil prices mean the dinar will skyrocket, right? Not so fast. While strong oil revenue definitely supports the dinar, it's not a magic bullet for automatic appreciation. The Iraqi dinar is a managed currency, not a free-floating one like the US dollar or the euro. The Central Bank of Iraq plays a huge role in setting its value. Plus, there are other challenges. Things like black market currency exchanges and the oil smuggling can divert a significant chunk of those dollar earnings away from the official system. One report estimated that Iraq lost around $150 billion to smuggling over the years. That's a massive amount of revenue that could have been used to strengthen the dinar and the economy. So even with oil booming, if the system for managing that money isn't efficient and transparent, the full benefit doesn't reach the currency. So, for anyone holding dinars or just watching the Iraqi economy, what's the key takeaway? It's simple. Oil is the bedrock of the dinar stability, but it's not the whole story. When oil prices are strong, the risk of the dinar weakening is much lower. But when oil prices are bearish, you can expect to see more stress on the currency. The real path to long-term strength for the dinar isn't just about high oil prices. It's about what Iraq does with that money. The key indicators to watch are not just Brent crude prices, but also Iraq's progress in diversifying its economy away from oil, improving governance, and strengthening its banking system. These are the structural changes that will build a truly resilient currency. In the end, the fate of the Iraqi dinar is a powerful drama playing out between global energy markets and the domestic policy. While the river of oil provides a lifeline, building a stronger economic future requires more than just reading the waves of the oil market. It requires careful planning, reform, and a clear vision for a more diversified economy. Thanks for tuning in today. If you found this breakdown helpful, don't forget to hit that like button, subscribe, and ring the bell so you never miss an update. Let me know your thoughts in the comments below.